Absolute Wealth. Real investors, real results.
This is Hubert Sanders with AbsoluteWealth.com. Let's take a look at Amazon. Now, obviously, when I'm doing this video, the markets are closed because we're getting hit with some bad weather on the East Coast. They were closed Monday. They're going to be closed Tuesday. That includes the equity markets. They're also closing the index futures markets. So there won't be a whole lot open. I mean, you can trade crude, gold, agriculture products, some currency futures, and some Forex, and some bonds. But a lot of the markets are going to be closed. Let's take a quick look at Amazon. So now if we take a look at Amazon, it has been the victim of, just like all the rest of the markets, it's sold off a little bit. So you can see this obvious trend up. You can see that it's broken the trend line, and then that trend line is now going to act like resistance, and then once again resistance. And now we have a good established downtrend, right? So we've got a downtrend established here, and it looks like this candlestick is going to test that. So let's take a look at some potential areas of buys. So anytime you see good little sell-off and a huge candle to the upside, it always makes you want to think about buying the markets, and here's why. If you see from this area, there was some support, so we bounced off of that support, which is good. Now, if we draw our Fibonacci's from this low back here in June all the way to the ultimate high, then we can see that we had another ambush trade that came into this 50% area, but actually closed below the red line, which is usually a bad sign. So nothing's perfect in trading. Just remember that. You can see this red means stop, okay? And this green means go short in this area. And now you can see that it continues to go down lower. Well, this momentum bar is shorter than the previous one, okay? And so is this next one it's going to be. So we're probably going to bounce up. Where we're going to bounce up? We're going to draw our fibs from 0.1 to 0.2, and we're going to see that we're in that area. Then we're going to go back to this area and see where the target will be. Before we do that, I want to show you one rule that's important that you know ahead of time is a close above the high of the low bar. So this is the low bar. This is the high above. This is the close of the low bar right there. So anytime you get a close or a execution above this line, that means you might want to think about getting long in this area and using this as your stop loss. So now we can use the Fibonacci. So we'll erase the ink, and you can see 0.1 to 0.2. So it could go to 240. All right, your stop could be 223. Could potentially go all the way to 240, or could go all the way to 242 to 246. Good luck. Hope it helps. I'll see you on the next video.